Have you ever wondered how investing in dividend stocks can be a reliable income source? Well, you're about to find out. Imagine a scenario where you own a piece of a successful company and they share their profits with you. That's essentially what happens when you invest in dividend stocks. Companies that have a track record of profitability issue these stocks. As a shareholder, you receive a portion of the company's earnings, usually on a quarterly basis. This payment is what we call a dividend. Now you may wonder, how do I receive these dividends? It all starts with the ex-dividend date, a crucial term in the world of investing. This date determines who gets the next dividend payment. If you own the shares of a company the day before the ex-dividend date, you're entitled to the next dividend payment. However, if you buy the stock on or after the ex-dividend date, the dividend payment goes to the previous owner. So the key is to buy before this date to secure the upcoming dividend. But beware of a strategy called dividend capture. This involves buying a stock just before the ex-dividend date and selling it shortly after to capture the dividend. Though it sounds tempting, it's not widely recommended due to the risk of the stock price falling by the amount of the dividend on the ex-dividend date. Dividend stocks come in two main types, common and preferred. Common stock dividends vary as they're set by the company's board of directors each quarter, while preferred stock dividends are more regular and fixed. The most consistent dividend payers tend to be blue-chip stocks, issued by large, well-established companies with a history of reliable performance. In essence, investing in dividend stocks can be a lucrative way to generate cash on a recurring basis. However, like all investments, it requires careful planning and consideration. Remember, the goal is to build a portfolio that will deliver a steady income stream with a reasonable amount of risk. To summarize, investing in dividend stocks is all about owning a slice of a profitable company and sharing in its success. The key factor is the ex-dividend date, which determines who receives the next dividend payment. There are two main types of dividend stocks, common and preferred, each with its own set of advantages. And finally, while the strategy of dividend capture may seem attractive, it carries a significant risk. So there you have it. A brief overview of how investing in dividend stocks can become a reliable income source. Remember, making informed decisions is the key to successful investing. So keep learning, stay curious, and happy investing.